I'm absolutely delighted to be back here at the New York version of the Economic Outlook. And there's always a rivalry between the New York Outlook and the Chicago Outlook. But I think this year New York is a clear winner, at least on one dimension: snow. An unusual one. Usually Chicago is the clear winner on that one. But you also may remember, for those of you who are returning, that it was an extraordinarily cold day here a year ago, just as it is today, and it was a year ago in Chicago. Now, of course, being hardy Chicagoans and hardy New Yorkers, that didn't deter people from coming out to an event like this and for economic activity going forward, but it froze the rest of the economy. The first quarter of last year, the economy contracted, and that was not something that was in, I think, any of our forecasts from last year, that the first quarter would be contractionary. But we then started to grow reasonably robustly, 4 to 5% in the second quarters and third quarters of the year. But then we fell back into the twos again in the fourth quarter. Now, for accountability's sake, of course, we want to review my forecast from last year, and accountability is always much easier if you do reasonably well. So I'm happy to raise the issues. I had three forecasts. One, as you may recall from earlier years, I'd been talking about the U.S. being in a sideways slide, and I thought we were finally going to break out and moving towards a more rapid recovery from the twos to the threes. I also said that we'd have a continued decline in the unemployment rate. And finally, I said I really didn't see any inflation pressure despite the growth that we would have, despite the decline in the unemployment rate. I'd see very little inflation pressure. Well, 2 out of 3 ain't bad. We never really got into to the threes, although we had a couple of robust quarters. We ended up growing in the twos. And so the question for the year ahead, as I'm sure many of you who have children have thought about, can we get beyond the terrible twos? We've been, and the terrible twos have not just been for 2 years or 1 year during the twos, but we've been in the twos for quite a few years. Will this year allow us to grow from there, from the terrible twos to the threes? My view is that this is going to be the fragile threes. And that's going to be the theme of my remarks for this year, the fragile threes. And so what I want to do is give a very quick tour of the U.S. with a little stop in Washington, D.C. to make a couple of comments on the debate over the president's budget, and then spend a lot of time traveling the rest of the world, particularly in Europe, to discuss some of the fragilities, particularly some of the fragilities associated with deflation, and a few historical analogies. Well, let's come back to the U.S. So we've seen recently continued strong growth and consumption by the consumer, and so by continued strength. Continued strength on the consumer side. Consumption growth has been reasonably strong. Obviously, lower oil prices have been helping disposable income for consumers. And that challenges some of the areas of the U.S., but on net, that's still a positive for the U.S. But people are still cautious. In the most recent GDP report we'd gotten, the savings rate is moving up closer to 5%, not as high as it had been in the old days, but certainly much higher than the approximately 0% that it had been during the mid-2000s. I'm not going to talk about the employment situation. Eric's going to focus on that in great detail, so I'll leave that to him. But I think he will agree there's still some challenges going forward. So consumption, what's next is investment, and investment is still lagging. We still haven't had the robust investment growth that you might expect given record low interest rates, given relatively low debt levels at companies, given high cash flows, profitability, but there's still this nagging uncertainty, the policy uncertainty that I talked about last year, especially on the fiscal side. I'll talk a little bit more of that in a few minutes. And so there's been a reluctance to do longer-term investment. And employment I consider part of longer-term investment, as well as structures. Equipment and software, we've been seeing some investment, but not as much as we would expect overall on equipment and software plus structures, but reasonable, but below par for performance, still keeping us in those terrible twos. Exports have been quite strong, but they're going to be facing some headwinds going forward. The dollar has strengthened quite significantly. In a trade-weighted basket, the dollar's up roughly 10 to 15% over the last year. And also, we're seeing a significant slowdown in the rest of the world. So even independent of the exchange rate effects, demand for exports are just not going to be there quite as much. So C plus I plus net exports, and now, of course, we come to government, always a big player in GDP. And part of the reason for the very strong growth in the third quarter, 5% growth, was because there happened to be a lot of government expenditures, particularly defense expenditures, that were logged during that quarter. Part of the reason for the lower growth in the fourth quarter was federal government spending had fallen off after those high levels. So we've had contraction from the freeze last year, a couple of strong quarters, a somewhat weaker quarter, back to the terrible twos in the fourth quarter. So it's a little bit cloudy going forward. I think the fundamentals are there for being able to get into the threes for the next year, but some challenges ahead. Now, one of those challenges is uncertainty related to the budget. And the president just put out his budget proposals, $4 trillion budget, $1.4 trillion in new taxes over the 5 to 10 year horizon, plus expenditures of about $478 billion on infrastructure. And so I just want to touch briefly on a couple of those items. On the taxes. So one of the things that the president has proposed is to have a one-time tax on the so-called, I love these words. Unfortunately, we don't have my colleagues from accounting up here. It's called indefinitely reinvested earnings. Now, what that is money that's trapped offshore that people are trying to avoid paying taxes on, and so they just keep it offshore, but it's indefinitely reinvested earnings. And so those indefinitely reinvested earnings are more than $2 trillion for American corporations because we have a very high tax rate in the US compared with the rest of the world. Now, that may seem astonishing because you always think of, oh, France has very high taxes, de registre in Europe and elsewhere. But our corporate taxes are actually quite high compared with the rest of the world. And that's why major multinational corporations are holding trillions of dollars offshore, not bringing it back on because of the much higher tax rate that they would face. So the president has said, well, let's try to get some of that, give an incentive to get some of that money back. So if it's not brought back on, tax it. I think that's something that there's very mixed reviews among the Republican members of Congress on whether that's a wise idea or not. But one of the good things is that both the administration and most of the members of the House and Senate believe that the corporate tax system is broken and needs fundamental change. It's crazy to have this system that gives very strong disincentives to keep so much money offshore. We can't just do a series of one-offs. We have to have sort of fundamental reforms to try to have a corporate tax system that encourages investment and reinvestment in the U.S. Will that happen during the next year? I'm not so sure that we'll have this sort of Clintonian honeymoon between a Democratic president and a Republican Congress to get a lot done. But at least they're talking about some of the same issues. So they're in the same room, even if they're not on the same page. The other piece that I want to talk about was infrastructure spending. There's a lot of discussion of, well, let's do more infrastructure spending that'll boost the economy and allow us to grow. The key is to think about, well, what's the cost benefit of this spending? So a lot of the discussion is on sort of broad macro level. We should have more government, we should have less government. And I think the right thing to do is, well, what's the cost-benefit analysis? There's some things that the government may be able to do reasonably well in infrastructure projects, and there are other ones that may not be so smart. So in like the original stimulus package from when the president got in, one of the pieces of that was a study to have a high-speed rail train between Duluth and Minneapolis. I'm not sure that's the key thing that's holding growth in the terrible twos rather than getting into the fragile, at least the fragile threes. But for those of you, and so I grew up in the New Jersey area, so I know the Tappan Zee Bridge well. And any of you who've gone across that know that very well, because you probably have lost a few teeth as you've driven across it, because there's so many potholes in it. They have these steel plates that go over it. The trucks, as well as the individuals who commute across, are slowed down dramatically. That's a true bottleneck. And so trying to relax that bottleneck is a worthwhile expenditure. I haven't done the analysis to know whether that particular project is the right one, but that's the sort of thing that you want to do. You want to think not just in general terms, we want 478 billion, no, we need 512 billion, or we only need 300 billion. What we need are things that are going to be pro-growth. And so we need to think about reforming the tax system to try to encourage investment, growth, and job creation. And we need to think about infrastructure investment that'll have the same focus. And so I hope we don't get too far into just the numbers, and we think about the economic substance that's behind it. Well, now I want to focus on the fragile part of the fragile three. And the main source of fragility that I see, particularly around the world, but it's still a source of fragility in the US, is deflation. That's a major challenge that I think we have going forward. It was the key theme of my remarks at the Chicago Economic Outlook, and that was right before the European Central Bank decided to undertake a quantitative easing, the sorts of things that the Fed did while I was at the Fed and has done subsequently in the U.S. But just in the last few weeks, it's not only the ECB undertaking these further easing actions. We've had surprise rate cuts from Raghu Rajan, my co-author and good friend, who is on leave from the university as the Reserve Bank governor of India, in Singapore, in Canada, in Russia. And so around the world, there's been this concern about slowdown, concern about deflation. And in the most recent numbers that have come out from the US, core PCE is down to 1.3%. So stripping out the declines in energy prices, we've been seeing inflation much below the Fed's target of around 2%. And so I'm in particular going to be focusing on Europe and thinking about some of the challenges here. And I want to think about some historical parallels. It's the 200th anniversary of the defeat of Napoleon and the Congress of Vienna that kind of brought Europe together, much like the European Union has tried to do so. There was a 40-year period of relative calm. And what broke that calm? The Crimean War. So a few parallels to today, because there's a few issues in the Crimea that seem to be unsettled between Europe and Russia. But one of the most famous things that came out of the Crimean War was a poem by Tennyson, so taking a leaf out of what Sunil was talking about. And the most famous poem, and that were probably his most famous poem, one of the most famous poems of all times, is The Charge of the Light Brigade. And so that poem was about a British division that was sent to fight the Russians. And the thought was, well, the Russians are retreating. They're in a very weak position, so we can just send in the Light Brigade because they'll be nimble and be able to push them back further. The problem was that the Russians were extremely well fortified. It was one of the most well fortified positions that were there, and the Light Brigade was devastated. And so one of the things we want to make sure not to do is send the Light Brigade in against the challenge of deflation, because this was a key motivating factor for us at the Fed while I was there, and I think for the world going forward. But why do we care so much about deflation? You might think, well, deflation's a good thing for the money in your pocket. It gives you more purchasing power because prices go down. So that can be a good thing. But there are some negative offsetting factors. One of those is that people defer purchases. So think about it as if the auto manufacturer said, well, the new model's coming out, but in 6 months, we're going to give you 10% off. So what are you going to do? You're going to wait. And so people defer purchases, and so you don't get as much economic growth because they're waiting for prices to go down. Of course, that's not going to affect fruit and vegetables as much. People are still going to eat. But for more long-lived purchases, people will wait. And so that reduces demand in an already challenging state. Second, and particularly problematically, is you have the potential for a debt deflation spiral. So let's say you're selling a million Happy Meals at $2 each, and you had taken out $2 million worth of debt in order to do the investment to sell those. Well, you're getting enough revenues in to be able to repay the debt. But what if those Happy Meals are not so happy anymore? And so the price has gone down to $1.50. Well, even if you're selling as many, you don't have the same amount of nominal revenue, so you can't repay your debt. But the time in which the prices are going to be falling for goods and services is going to be a time when you're probably not going to be selling as much either. So you get this 1-2 punch where you're not getting as much revenue per unit and you're not selling as much, and so you can't repay your debts. This is exactly what happened in the 1930s, and so you had then people not being able to repay their debts, whether it's in the household or in firms, a debt deflation spiral where firms went bankrupt, individual households went bankrupt, asset values went down, people became unemployed, they demanded less, demand is going down, prices going down, and this downward spiral further and further downward. And that's why it's, I think it's such an important thing to try to avoid deflation, both because of the deferral of purchases and because of the downward spiral. And this, I think, is one of the key challenges we have going forward. So we certainly don't want the ECB to be sending in the light brigade against this heavily fortified enemy. So I'll close with a little bastardized version of Tennyson's famous poem. You may have heard the stanza, "Cannons to the right of me, cannons to the left of me, cannons in front of me." So the variation that I'll have in thinking about Mario Draghi's challenge, Angela Merkel to the right of me, Greece to the left of me, deflation in front of me, stormed at and shot and shell from all around, while horse and hero fell. They had fought so well, back from the mouths of hell. Oh, wild charge they made, all the world wondered. Honor the charge that they made. Well, I hope that next year when we reconvene, not only will it be warmer, that we won't be honoring the Light Brigade, but that Draghi and company and his fellows and sisters and brothers from throughout the world will have gone through the valley of death and the jaws of hell victorious and vanquished the devil of deflation. Thank you very much.